banks have been around for over a century, serving communities that have been underserved by mainstream financial institutions. The unfortunate story is that they were born out of racism because Black, brown, and immigrant communities couldn't go to mainstream financial institutions for their banking services. But today, they're just as important. They're serving communities that are 77% minority, that are 2 times more likely to be denied for a small business loan, even if they have the same credit profile as their white counterparts, and communities that are 2 to 3 times more likely to be unbanked and underbanked. So they are still just as important today, data shows, as they were over a century ago when they first started.
Todd, does that sound like the segments that your bank has a wide reach now, especially,
Yes.
in the last few years as you've grown and acquired other banks?
Yes.
But does that sound like the communities you serve?
Absolutely. Absolutely. In terms of the communities that we serve, typically they have lower credit scores. They don't have as much net worth or wealth to come to a bank with. And so over 50 years, Liberty Bank has been very successful in lending to those communities that are underserved and overlooked. And I think the strong part about MDIs is that we've been doing this for a very long time, and we know what we're doing, and typically our delinquency rates are within our peer group. So it shows that we have a tremendous understanding of underwriting within our communities. And so the more support that we have, the more impact we can pass on.
The perception is, right, that that's not the case.
Yeah.
If you go back to traditional banking, right, or many of the bigger banks, like there's that perception that, okay, that person is not going to be a reliable customer. They're either going to have trouble maintaining a loan or whatever. But it's interesting to hear those statistics. Why aren't they more well known?
Well, we have limited marketing budgets, so we can start there. And, we have not done a really good job at telling our stories just because we're limited to what platforms we are part of. Thank you all for having us on this show, because obviously this is going to help us hopefully get some more supporters. But in terms of our bank performance, it's there. And there are about 150 MDIs amongst the roughly 4,000 plus banks across the country. So we're there, and we're here to stay, and we're hopefully here to grow.
Nicole,
Well, go ahead.
Yeah,
You want to jump in?
I would also say that we need to start redefining what we think of as risk. Oftentimes, Black and brown borrowers are considered riskier, and that's not the case. That's not what data shows. When you look at the data, what allows us to say yes when others say no is because we're looking at data points outside of credit scores. We're looking at the fact that you're consistent with your rent payments, your utility payments.
Stop right there for a
that you're
second.
consistent.
Rent is very important because there's
Absolutely.
not a lot of necessarily home ownership because of
because of history
lack
of
of wealth.
redlining
Right.
and all kind of things.
So rent can become a really important metric.
But it's not when you're looking at underwriting at scale. That typically happens at larger institutions. They're underwriting at scale. But what we are great at is relationship banking. Because I know you, I'm looking at other factors, other data points. I understand that there's a history of redlining in this community. So you may not own a home, but guess what? You're consistent with your rent payments.
Shameless plug. We've done close to over $1 billion.
We love shameless plugs.
We've done close to over $1 billion in mortgage lending in the communities that we serve over the last 8 years. So when you look at access to capital, putting the money out and getting it back, we're experts in this field.
I want you both to answer this next question. Nicole, I want to start with you. This has been a tough year for regional banks, given the regional banking crisis we experienced in the early part of this year. What have you heard from your members? How tough has it been on your members? And Todd, just talk to us a little bit, about the health of your bank in the wake of, rates going up.
So I will talk about the last 3 years and this post-pandemic, post-George Floyd environment. You've seen explosive growth of minority banks. They've grown by 38% in asset size, and Black banks have experienced the most growth, growing by 62% in asset size. So a lot of growth that is happening, unprecedented growth. So obviously when the bank failures came, there was a concern about deposit flight. There was some deposit flight. I would be lying if I said it didn't exist. It did happen, but it has since stabilized. And so I think you had the strong context of what was happening, of the explosive growth of people talking about and investing in minority banks. Billions of dollars from the federal government. Wells Fargo invested $50 million into 13 Black banks. And so there's been a lot of growth, and I think that helped set the environment of when that crisis happened, they were well positioned.
And we were one of the recipients of the investment from Wells Fargo, and they've been a strong partner with us. And so while we have had a small number of deposits to run off, a lot of our customers are mission aligned with us. They understand what we do, how we do it, and when they are supporting that, it only allows us to do much more bigger things in our country. In terms of market rates, interest rates, we are not the big gorillas that are offering the top tier rates. We have about a 1.5% to 2% below sort of that ceiling, and a lot of our clients are very pleased with that.
How do you
offering.
do that?
Well, one, going back to relationships,
Okay.
making sure that supporters of us know exactly how we're deploying funds
Yeah.
and the impact that we have on the communities. And so when we show our scorecards, a lot of people are impressed.
Yeah.
Are you showing, though, any signs of stress in this environment? I mean, part of the reason I'm asking is I feel like we're in this environment from day to day. The sentiment can change depending on the data statistics.
It's high interest rate environment. The borrowing costs are high for
So how would you? Let me start with you first, Todd. Like,
Sure.
what? Any signs of stress among your depositors or your consumers, your clientele?
Not that we see right now on the deposit side. On the credit card side, we are starting to see a tick up. But typically...
Defaults or just higher balances or?
Both.
Okay.
Both.
Late
Yes.
payments?
Yes.
Okay.
But not to the point where it's causing any concern. Typically, African American communities and Black and Brown communities, we have a lag that takes place when recessions take place or when downturns take place. It doesn't necessarily hit our communities dead
away.
on. There might be a 1 to 3 year lag until we start to see the real effects of that. And then after that time passes, sometimes we gain support or we have another turn in the economy that helps us to offset,
Right.
a truly bad delinquency rate.